morning, guys. Welcome back into the pre-market live stream here with the Everyday Growth Advisors. Hope you guys are having a good morning or evening wherever you are. Quick little pre-market stream here. Hope you guys have been enjoying all of the content that we're putting out. So really some key movers here. Also, if you watched Wednesday's live stream, you would be very, very well prepared for what happened yesterday. As we spoke about all of the sectors to press on, financial, semiconductors, both sectors went absolutely nuts yesterday. Financials was up by like almost 5 or 6%. Semiconductors themselves went completely nuts. The SMH index was up 10% yesterday. So just those two plays alone, which I posted right on this live stream, and if you've been consistent and you've been attending these live streams, it's basically free game, right? I've been putting out free game for you guys time and time again, so I hope that you guys have been following at least some of the plays that we've been talking about. And of course, we laid it down nicely for you guys in terms of the CPI, what were the expectations, and what was going to happen ahead of time so that you already knew how to play it. So if you benefited somehow or another, I would love to hear from you guys and tell me if you guys did, because I love to hear that you guys did well. And yeah, drop any tickers requests that you have in the chat right now, and also don't forget to smash the like button, guys. If this is your first time here, make sure you subscribe as usual, yada yada yada, all them good things. Okay, so CPI data came out much more bullish than expected, kind of signaling that CPI has cooled down. 7.6, I believe, percent year over year was the print. Now, couple things. This CPI data could be pretty sticky. So one piece of data doesn't dictate the entire move for the entire stock market for the rest of all time. Remember that inflation can come back, so it's meant to be sticky. It doesn't mean that we get to 7.6 now. It doesn't mean that we can't go back to 8 or then come back to 7.7 and then go back to 8.3 and then come back and go up and come back and go up. The only way we'll know if we've indeed tackled it is after 3 consecutive months of negative CPI readings. So it coming down, then we know, okay, we've tackled it. The Fed is still very much expected to hike rates in the next meeting. Maybe they don't do 75 basis points, maybe they do 50 basis points. That might be something that's on the table, and that's why the market is rallying. Okay, so that's the expectation here. Now, so just a reminder not to get too ahead of your cajones. That's all I'm trying to say. Don't get too ahead of everything ahead of you, and don't over exuberate yourself into market emotions. Remember, in order to be a really good trader, you need to be emotionless. Okay, so when things like this happen, it's just another day for you, right? If you do this long enough and you're profitable at it, honestly, it becomes quite boring. Like I'm telling you, my life or this profession, the way I look at it, it's a boring profession, because I'm 90% of the time I'm waiting for moves to happen, and about the 10% of the time that moves do happen, they all get concentrated in these bouts of one day. So majority of your life, if some of you are considering doing this for full time, or you want to quit your job and do this, remember you're gonna have to control your emotions, and therefore you have to behave like a robot. The lesser decisions you make, the better. Try to stick with a set of rules that you're gonna follow till the end, and that's really just the way that you're gonna become better and more proficient. Like when I see this kind of a move, I don't get emotional. I'm not like, oh man, I missed so much of money on the table. No, because I was in the move before already, right? And so we've already set up for either scenario to happen. We had either the bullish scenario, either the bearish scenario. I've laid it out very nicely for you guys on the newsletter. I've been laying it out very nicely for you guys on Monday's live stream, Wednesday's live stream, and now on Friday we're wrapping everything up ahead of next week. So next week we have OPEX on the table. Remember, it is the third Friday of the month, which means that we'll have almost $2 to $3 trillion worth of notional volume of options expiring again. And you have to think ahead in this market. What are we likely to see? Yes, we're likely to obviously see some upside extensions in the SPX, but we are at a key pivot, right? We spoke about this pivot point the whole of this past week. I also laid it down in the newsletter that this is a key pivot point to get above and hold above if we want to see these upper levels on SPX. So where do we go from here in terms of technicals? Well, if we close above 39.50 today on SPX, that's going to be super bullish, and that will obviously set us up to get into 41.50, okay, by sometime next week. However, after sometime next week, you would fully expect that 41.50 will become a rejection for SPX for us to get a pullback back into either 3800s or 4000s. Okay, so that's your more macro driven view for a bigger time frame. All right, so you always have to think from an exploded time frame first, right? Okay, we're looking from the daily time frame, and now we zoom in and we see, okay, what's going on in the shorter time frame, because we wanna obviously play this in the most possible effective way. Now, short time frame, I'm gonna use SPY for this so that you guys you have a better understanding of what we're expecting here. A pullback into 390 is the first retest of yesterday's key pivot point. Ideally, we really do want to see a retest of 384, 385. That means a pullback to this level before we see a bounce. However, I'm of the view that if we get the 390 bounce, that's going to be a very big extension to the upside. Okay, so that means that bulls are still overly in control of this market, and they don't want to see a deeper pullback than that. A healthy pullback, however, would be the 384, 385. Okay, this is this level right here. All right, right, pretty much below the supply zone, and that might spark to see how much of volume and momentum comes in to try and cover this gap at 375. But I don't think that we get there. Okay, I don't think that we get there. In fact, if we go down and cover the gap at 375, I would be very surprised. There will also be a lot of profit taking ahead of time. And I just don't see the case of that happening just right away. So your base case for today should be to watch 390 as a key pivot point and 385 as a key pivot point. Okay, these are going to be 2 points at which you can get bounces or rejections. All right, on SPY. And that's all you need to know on this side. All right, so your game plan should be built around how you're going to be taking advantage of this situation. And I believe that we are just buying up right now for absolutely no reason. Is there any news? Oh, wow. So cryptocurrency, FTX, I think just announced bankruptcy. Yeah, Chapter 11 proceedings. Commences Chapter 11 proceedings. Okay, so the cryptocurrency firm FTX, the one that got clapped, they are going to be filing for Chapter 11. So some crypto holdings are going to be seeing some drawdowns today. Anyway, forget about cryptos. Let's continue talking about equities. Now, this is on technicals for SPY/SPX. Let's also dive into what's going on with the VIX here. We were expecting a bounce at the 23.89. We got that bounce, and then we rejected very, very bearishly at 25.9. So now the next level for the VIX to come down to is going to be 21.29, right? I spoke about how the VIX being so downtrodden here is kind of suspect. And I still am holding some UVXY shares in case of some kind of a movement to the downside. That's how I am choosing to hedge my portfolio right now, right? I don't want to outright buy puts. I want to hold on to some hedges in terms of volatility, because I still think that volatility is going to be pretty high, okay? And then you have the US 10-year, and this is really the main thing that's driving equity valuations higher, right? And you guys know why by now. I've mentioned this almost 10 million times on the live stream. But for the benefit of those who are new to the live stream and you don't understand why or how the US 10-year yield affects stocks, remember that the US 10-year yield is one of the most important ingredients in valuing stocks. We use this as the risk-free rate for valuations and discounted cash flows, or in any kind of cash flow method valuation. We use 10-year yields as a very key component of it, okay? So having the 10-year yield come down allows for those discount rates which we use for stock valuations to be repressed a little bit, and that gives relief to tech stocks in more obviously more importance than regular stocks. Okay, and then a run-off effect of that is the dollar deproving. So the dollar is kind of a it's a run-off effect of everything else that's happening. Okay, so you have the bond market that reacts, and then you have the dollar being affected by that, and then you have the stock market that's affected by that. So it's always the bond market that will make the effect for the rest of financial securities. Okay, so dollar index coming down here, and obviously the next bounce for this is going to be around 103 or 104 even if possible. And so we have a little bit of ways down for the dollar. We have a little bit upside for the SPX. We have a little bit upside for everything. But as long as today, if we can reject and we can fall further down, we should see a choppy market today. Okay. Now, there's a couple reasons why I say this will be a choppy market. Because whenever a big move happens, think of it like a huge python, right? A huge python. Yeah, this is my python. And this is his tongue, right? If he eats a huge rodent or whatever freaking animal, it's going to take some time to digest. So the market needs to digest this big move. And it's very likely that we'll get like fall and then a buy up and then a fall and then a buy up and a fall and a buy up and likely form some kind of a bull flag or some kind of a, another kind of a pattern for us to act on next week. Okay. So today is really not the day until and unless you get really nice momentum movement on whatever that you're looking at. You want to try and avoid today, okay? Because it might be choppy. It might be. Now, heading into next week, we have OPEX on Friday. And so we're likely to see on Monday, Tuesday, some kind of bullish continuation. And then the rest of the week should see corrections downward, okay? Now, the corrections can obviously come in advance, so we don't know. That's why I was giving you guys the brief on the key pivot points, which is the 39.50. And then also for today on SPY, you want to watch 390 and you want to watch 385. These are the key pivot points for today. And this will all give you a very, very important bird's eye view of the entire market. Okay. Yeah, so that's all I have for you guys in terms of the macro. Now, I know that we want to go through some charts. So I'm going to go through the ones that I'm watching the most. And I'm going to tell you guys about one that I am looking at more importantly is Tesla. Okay. And amidst everything that happened yesterday, Tesla only managed to clinch a gain of 7%. Amidst everything else almost gaining double digits in the same basket of FOMO or / momentum, right? Enphase Energy was another one that kind of lagged, and so was GameStop, Airbnb as well. All of these were laggers, and that for good reason, okay? Have a look at, so this morning you just received a report, and we have the OI changes for Tesla day over day, and this is really interesting because you might want to listen in on this. So we're seeing in the short term, a lot of put buying for Tesla. You can see that, in fact, for today expiries, there was an immense amount of put buying yesterday. The open interest changed almost by $7,000 to $8,000. So a lot of bearish betting on Tesla outright for today expiry. Okay. However, in the longer run, like we're talking 1 month down the road, they're also betting to the upside. Okay. There are these 210 calls, and then there's also some 205s and some 220s. And then there's also another one. Hold on, let me see. Let me find it. Yes. So there was this. Some 200 calls for next week. These are kind of low open interest. More next week here, but these are more sold calls. Anything on the bid side is typically more to the sold side. Anything on the ask side is more to the bot side. So that's what we're looking at here. You can see that there's a bias for Tesla to the downside in the short term, which means this week and next week. And then right after that, the bias flips on its end and we start going bullish. So probably Tesla bearish into next week and then bullish after that. So that's one thing that I'm looking at from the options flow, which is fairly interesting. And then there obviously we do breakdowns like that, from time to time on the Discord, and we put it out there for all of you guys. Okay, so the market just opened. Yeah, so one of the trades that I do want to play, hopefully, is Tesla short, and we'll be taking that along with the team. Anyway, the market just opened, so I'm going to be getting on Discord with the team right now to trade live with them. So I hope that this helped you out in some way, and if anything, we do these streams for you guys so that you can really benefit from them. Some Tesla shorts would be really nice play here, so make sure you grab some of them. In the meantime, have a good trading day, guys, and good luck for your trading session. We'll see you guys on Monday. So peace out, and yeah, bye, guys.